Hello, and welcome to Diversity's 2020 Personal Income Tax Series. Today's topic is personal income tax for seniors. My name is Eric, a volunteer at Diversities. The purpose of this video is to help you get a better understanding of preparing tax returns for seniors. Let's get started. First of all, we would like to thank our sponsors for their generosity and support, which include the Guardian Law Group, James Wong Financial Limited, Calgary Chinatown Lions Club, and Elena and Eric, CPA CA. Diversities is a renewed expression of our long-term vision, a welcoming home for immigrants where Calgarians of all ethnic origins are meaningfully engaged in the community. Please note that Diversities does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting service. You should consult your own tax, legal, and accounting advisors before preparing any tax returns. In today's video, we will discuss the importance of filing your tax return, the federal and provincial benefits available for seniors, common taxable and non-taxable income for seniors, tax deductions and credits, foreign assets over $100,000, ways to file your tax return, and examples of some T-slips and receipts. Now, I'm sure you may have heard someone say that they have low income or no income, or that they don't owe any tax, so they don't need to file their tax returns. It may be true that they don't owe any tax, but without filing their tax return each year on time by April 30th, they may miss out on some of the benefits they are entitled to, because many federal and provincial benefit programs for seniors use your income tax return information to determine your eligibility. As a general rule, a Canadian resident is required to report their worldwide income. So no matter where your income is earned, you are required to report it in your Canadian tax returns. However, not all money you receive is taxable. Only the taxable income needs to be reported on your tax return. Examples of taxable income include your OAS, your worldwide pension payment, including CPP, income from RRIF or RRSP, investment income, capital gains that you earned anywhere in the world, and most COVID-19 benefits, other than the one-time payment for OAS and GIS recipients. Non-taxable income, that is, income you do not need to include in your Canadian tax return and do not need to pay tax on, are GIS, GST or HST credits you received, most amounts received from a life insurance, most amounts received from TFSA, and the COVID-19 one-time payment of $300 for OAS recipients with an additional $200 for GIS recipients. Even though you need to pay tax on your taxable income, you can claim tax deductions and tax credits against the income or the tax payments. Tax deductions and tax credits are different. Tax deduction reduces your taxable income, and tax credits reduce your tax dollars. For example, if you have an income of $50,000 and you made an RRSP contribution of $10,000, seniors can still contribute to theirs or their spouse's RRSP until age 71. Since it is a tax deduction, you can reduce your taxable income by $10,000. In this example, your taxable income will be reduced to $40,000 and the federal tax amount, including the tax deduction, will be $6,000. On the other hand, everyone is eligible for a federal basic personal credit of $13,808 at 15% or $2,071 as a tax credit for 2020. This tax credit applies after calculating the federal tax amount. As such, the net federal tax amount is $6,000 minus $2,071 or $3,929. We will go through some common tax deductions and credits that are related to seniors in the following slides. The first tax deduction we will be going through is the pension income splitting. As we know, Both the federal and provincial tax rates go up if your income is higher than certain thresholds. In the case where a person receives a higher pension income than their spouse, it may be beneficial to transfer some of the pension income from the higher income person to the lower income spouse to lower their overall tax payable. This transfer is called pension splitting, and a senior can share up to 50% of their eligible pension income with their spouse or common law partner. Eligible pension include RRIF, RRSP payment, and certain retirement compensation arrangements. But you cannot split your OAS, CPP, or a certain portion of the RRIF. In order to split your pension income, you and your spouse or common law partner will need to file a joint election. Another example of a tax deduction in the RRSP contribution is the RRSP contribution. Seniors can still make contributions to theirs or their partner's RRSP up to age 71. There are three ways for you to withdraw from your RRSP accounts. They are to transfer to an RRIF, to purchase an annuity and receive RRSP payments regularly, or withdraw cash from the RRSP account. Please don't forget that amount withdrawn from the RRSP account is taxable income in the year of the withdrawal. Here are some examples of federal government tax credits. Basic personal amount is available to all Canadian individual taxpayers. Spouse or common law partner amount is applicable if your spouse or partner has income of less than $13,229 for 2020. The amount you can claim as spousal credit is the difference between your spouse's income and $13,229. Age amount is applicable to you if you are 65 or above by December 31st, 2020. Pension income amount, you can claim up to $2,000 if you receive pension income in 2020. We talked about pension income splitting in the earlier slide. You can claim medical expenses if it totaled more than 3% of your income. Medical expenses are not limited to prescription drugs. Examples of medical expenses include air conditioning, bathroom aids, book page turning devices, etc. Home Accessibility Tax Credit, that is the HATC, is another tax credit that is available for seniors or people with disabilities. You can claim up to $10,000 in expenses to make changes to your home. Qualified expenditures include installing a wheelchair ramp and widening doorways for wheelchair accessibility, installation of handrails, walk-in tubs, wheel-in showers, etc. However, the purchase of household appliances, home entertainment devices, or routine maintenance and housekeeping costs are not qualified expenditures. Canada Caregiver Credit, CCC, is another non-refundable tax credit if you support your spouse or common law partner with a physical or mental impairment. In order to claim this tax benefit, you will need documents from a medical practitioner showing when the impairment began and what the duration of the impairment is expected to be, or if your spouse already have a disability tax credit certificate issued by the CRA. You do not need to send the document along with your tax return, but you will have to provide it when the CRA asks for it. For more details about the tax credits or other tax credits that may apply to you, please check with the CRA through their website or call the CRA at 1-800-959-8281. In addition to reporting your taxable income and claiming tax deductions and tax credits, you may also need to report your foreign assets when you file your tax returns. If you own assets outside Canada of more than $100,000 in total, you will need to file Form T1135, Foreign Income Verification Statement. The penalty for non-filing when it is required is significant, so please remember to file the Form T1135 if it applies to you. Examples of foreign assets include savings or investments in foreign bank accounts, overseas real estate property, except if the primary use, which means more than 50%, is for personal use, and foreign pension plan and debts owed to you by someone who is not a Canadian person. There are different ways to complete your tax returns. You can hire someone to file it for you. For example, you can pay H&R Block or an accountant to prepare your tax return. Or if you are a low-income taxpayer, you can use the free tax clinic in your community. This year, Diversities is partnering with CPA Alberta to file tax returns for low-income individuals and families for free starting March 1st. Please contact Diversities for more details and eligibility. You can prepare your own tax return either online, on paper, or by phone. Let's go over each of these three options. To file your tax returns online, you will need a tax return package. Some of these tax return packages are actually free to use. On the next slide, we will show you the list from the CRA website. Previously, we were able to go to the post office to pick up a paper copy of the tax return form. However, the post office has stopped carrying the paper tax return form now. Instead, you can call the CRA for a copy. Or if you filed your 2019 tax return on paper, the CRA will send you a paper copy of the 2020 tax return form automatically by mail around mid-February. Lastly, you can also file your tax return over the phone. This is a new filing method introduced by the CRA recently. Please note that this option is only available to those taxpayers with low or fixed income and have received an invitation from the CRA. It's a service that lets you file your return by answering a series of short questions through a secure, dedicated, and automated telephone service. No matter which method you choose to file your tax returns, please remember that it is your responsibility to file your tax return each year. And whether you decide to hire someone or prepare your own tax return yourself, it is beneficial for you to understand the fundamentals of the personal income tax. Here's a list of 16 tax return programs certified by the CRA. As mentioned previously, some of these are free to use. For most of your taxable income, there is usually a slip to let you know how much income you have received or how much tax has already been withheld. We call these tax slips or T-slips. As an example, for the OAS amount you received, you should receive a T4A OAS in the mail, and it would look like this. There are many boxes on this T-slip, but you don't need to use the information on all the boxes. If you are using a tax software to file your return, the software will ask you to fill in the information contained in certain boxes on your T-slips. For example, in Simple Tax, which is a tax software certified by the CRA and is free, they ask you to enter the amounts included in boxes 18, 19, 21, 20, 22, and 23 on your T4A OAS as shown in the bottom of the slide. We included a pink X in the sample T-slip to show you the location of the boxes. We will continue to include a pink X in some common T-slips a senior may receive on the following slides to indicate the locations of the boxes needed for filing the tax return. For your CPP income, you will receive a T4AP, which looks like this. For your investment income, you will receive a T5 from your financial institution. Please note that the amount included in here may not be in Canadian dollars. Box 27 shows you the currency of the income you received. You may receive more than one T5 slip if you have investments in more than one financial institution. This is your RIF income T-slip. You may also have more than one T4 RIF if you have multiple RIF accounts. Same for your T4 RSP. This is your T5007, which reports your worker compensation benefits and social assistance payments, like the GIS. GIS is not a taxable benefit, but the government will still issue a T-slip on this. Instead of calculating the taxable income, the T5007 is used for calculating your benefits, so don't forget to include it in your tax return. For tax deductions and tax credits, there are usually no T-slips. For example, there are no T-slips for medical expense credits, so you will have to keep all your receipts and you will need to enter the information for each of the receipts. If you're using Simple Tax to file your tax return, here is how it looks and the information it requires. Similar to the medical expense credit, there are no T-slips for donations you made during the year. Instead, you will need to rely on the donation receipts you received in the year. Some tips related to donation tax credits. At the federal level, your credit will be 15% for the first $200 of donations, followed by 29% for the remainder above 200. Each province provides donation credits as well. Since donation receipts are transferable between spouses and you can claim your donation credits for up to 5 years, you may first want to combine yours and your spouse's donation receipts, and you may also want to consider accumulating them over several years rather than claiming it each year. There is also a new tax credit for the 2020 taxation year, which is the Digital News Subscription Tax Credit. This new non refundable credit is available for you to claim subscription costs to Canadian digital news media from 2020 to 2024 of up to $500 per year. The tax rate is 15%, so you can get a reduction on your tax payment by up to $75. For more detail on this new tax credit, please check the CRA website. Most tax software packages will notify you automatically if you qualify for the Climate Action Incentive. Here's how the screen would look like using SimpleTax. Before we end our video today, we should talk about what you need to do after you've filed. Canadian tax law requires you to keep all tax documents for at least 6 years. So for 2021, in addition to your 2020 tax return, you should also have a record of your tax returns from 2015. However, it is often encouraged that you keep your records for longer. Another thing I would like to suggest is for you to register with My Account with the CRA. My Account allows you to check your tax return filing status, download your tax slips, set up direct deposits for refunds and refundable tax credits like GST, HST credits, and Canada Child credits, and view your RRSP and TFSA contribution limits. Please follow the link here to set up your My Account. Thank you for watching, and we hope this video helped you better understand the process of preparing tax returns for seniors. Don't forget to check out our other tax videos for students and working families on our website. Please send your comments and questions to info@diversities.org. Thank you.